It's my pleasure to welcome you all on this lovely Davos morning. And despite the hour, it's good to be back here today and doing this in person. I think we can all agree. And it's also my pleasure to be hosting this event today for FT Live and our partner HCL Technologies, which we have grandly titled Unlocking the Transformative Potential of Blockchain. And we're going to examine how blockchain tech and crypto can improve global financial inclusion through better accessibility, lower costs, and better transaction speeds, and what needs to happen in the world for this to be achieved. Now, we have three excellent panelists here today from some of the biggest software, payments, and financial companies in the world to discuss the topic. And at the end, there'll be 10 minutes for us to take your questions. So first, right on my left, we have Brooks Entwistle, Senior Vice President of Customer Success and Managing Director for APAC and MENA for cryptocurrency and payments company Ripple.
Thank you.
We also have Richard Nash, Head of Government Relations at PayPal, a company I'm sure you're all familiar with. And finally, Rahul Singh, President of Financial Services and Digital Process Operations at HCL Technologies, which is the FT's partner today and sponsor of the event. So thank you very much. Now, I want to go right into our theme, but please remember, as I said, there'll be 10 minutes for questions at the end. So jot down whatever you're thinking, whatever you're curious about, and I'll try and get through as many of those as I can. So first point here, I want to look at what the key lessons are that have been learned in the last decade that blockchain has existed. And if it is to achieve widespread adoption in financial services, which we're just seeing the start of happening now, what has to happen from here? And Rahul, I want to bring you in first here.
Yeah, no, thanks for that. The blockchain as a technology has been here for almost a decade, as you mentioned, perhaps even more than that. But like any new technology, it takes time for user acceptance to happen. So, what we've seen is that, while the technology exists and there are many gurus on the technology itself, there is a lack of use cases. There are some, and I'm sure we'll hear from the rest of the panelists about the use cases which are there, but still the number of use cases, especially in financial services, are still evolving. And the reason why it is taking more time to evolve, I think, is because of the complicated technology, understanding of blockchain, the risks which are involved, and financial services being a regulated industry, the regulations across the globe, how they adopt to it. And I also think just availability of people. Today in the digital world, there's scarcity of resources. So now scarcity of resources, on top of that, scarcity of resources in a new technology, I think also impede the growth. But otherwise, the technology itself, is super cool. It's transformative. New products can be launched at a faster pace. I'm sure we'll hear a little bit more about that from the panelists. And also the cost of course, there's the environmental cost, which we have to keep in mind. But excluding that, otherwise the cost to transact is relatively lower than most of the financial products.
And Richard, same question. What have we learned in the decade that blockchain has existed?
Yeah, I think, as Rahul was saying, lots of really exciting projects, lots of exciting pilots, lots of great discussions around the potential. And we see that coming through in, I'm sure Brooks will talk about remittances and the potential there. I look at some of the issues that are traditional pain points for the payments industry around identification, around verification. And we see a lot of very positive developments in that space as well. So I think lots to be excited about. And I think if you look at some of the larger companies like ourselves in this space, we're sort of learning to walk and then run, right? So you see what we're doing, and it sort of exemplifies a lot of the industry in terms of building up for the last 5 or 6 years in terms of developing strong teams, getting the kind of talent that we will need to be able to progress what we want to do. And then starting to go into the space, in the payment space for us, with some crypto services in certain jurisdictions, buy, sell, hold, pay with crypto under some circumstances, and then trying to develop that. So you see companies like us, we were the first company to get a BIT license from the New York Department of Financial Services. And so you can see things are moving. They're sort of on the cusp for companies like us, but I think there's so much innovation in some of those areas I mentioned that will feed into these ecosystems. And that's what I think is already, it's more than exciting for all of us. We really see that now. And I think, Brooks, you're definitely on the cutting edge there.
Yeah. Brooks, I want to bring you in on what you think are the best real-world examples of the use of this technology in cryptocurrencies so far? I mean, where have you seen this best adapted to improve financial services?
Yeah, I think it's a great question to kick off on, because I think this notion of what are the actual use cases for this technology, that as you walk down the promenade here in Davos this year and can't go 2 feet without seeing some sort of blockchain or crypto sign or billboard or house, which is super exciting. But the reality is, what are we actually solving for, and how are we impacting the world? Ripple is exactly a 10-year-old company, interestingly enough, and was founded as a crypto and blockchain solutions company. And early on, we looked at this exact question: where can we go and make a difference in the world? And we really settled on the movement of cross-border payments, the movement of value across borders. It was very easy to move information across borders, but value has been a sticking point for a long time. And so we actually went away in some ways from cryptocurrencies or digital assets and went back to build a fiat-based network using blockchain technology, which over the last year or so now has been, if you will, cryptofied. And as we put digital assets on that network, we've been able to move money across borders faster, cheaper, greener in ways than anybody ever thought possible. And importantly, and we've grown a global company. I'm based in Singapore. The Middle East and Asia are two of our biggest regions. And of course, for the remittance flows out of the Middle East into the Philippines or elsewhere, the amount of activity and volume that we are seeing now, once we've turned this on, is exceptional. So I think it all comes back, our teams every day get up thinking about what is out there that we can solve for and build towards it.
Yeah, because there is that old saying that, cryptocurrency and blockchain is kind of a solution in search of a problem. Yeah. But I think, as it starts to improve and become adopted in the mainstream financial system a lot more, we will see that accelerate. Raul, one of the purposes of this session today is to look at how blockchain can help global finance be more inclusive, bring people into the system. So, I mean, what solutions do you think are available to bring these billions of people around the world who don't have access, especially to sophisticated financial services?
I think, see, if you look at the globe, there are like about almost 2 billion people, they say, who are underbanked or don't have access to banking, facilities, which most of us enjoy. But the good part is that although there are 2 billion unbanked people, right, across the globe, they say that 60 to 70% have access to, the mobile phone, right? And, combine mobile technology with blockchain technology, and things like, identity of the individual, or payment transfers, which, companies like Ripple provide, or other documentations related items which can be kind of digitized, increases the opportunity for, larger, spread of financial services to the underbanked people. Yeah. Because the technology allows for that to happen. Now the question is, the technology may allow that to happen, but then do you have the regulatory system? Do you have the banks? Do you have the rest of the ecosystem developing products and services which can actually reach the last person? And that is where, blockchain is not like a solution. It's not like a Swiss knife, which is a solution to all the problems, right? You have to develop use case by use case. It's like you may say block by block or product by product or feature by feature has to happen. And that's how the usage of that will increase and will go across the board. Now, for example, there are case studies right now. Ripple is a great case study of payments, right? And flows across countries, cross-border flows. There are examples also in the insurance industry, right? Where insurance products are being launched around the blockchain, again, to service the underinsured people, right? Yeah. And so on and so forth. So there are certain case studies which are now taking place, but I would still think that the commercial implementation of that still some way to go. Payments is happened. Other products will take a little bit more time.
Yeah, because one of the other topics we wanted to look at was savings. Like, yes. How can this help deploy people's savings, help them earn more interest and direct them to more productive assets?
Yeah, that's a tough one because see, if you look at savings, you start by opening an account, right? Yeah. And to open an account, you need things like KYC, and then when transactions happen, there's AML and there's fraud detection stuff. And so the technology allows for all this to happen in split seconds, right? So, for example, transactions on digital and on blockchain, the AML, for example, anti-money laundering or any other security that you may want to build in is very fast. The issue that, as I explained earlier, is that the use cases of that, of implementing it into converting that into a savings product and actually launching an account, is where the gap lies. And the use cases will develop over time.
Well, what sort of time period do you think we're looking at?
I would think that the most important part here would be the regulatory acceptance of
Yeah.
technology. The minute that happens, for example, people talk about crypto coins, and crypto coins goes up and down. So that, that creates a lot of fear in people accepting the new technology.
Yeah.
But at the same time, with stable coins coming up, CBDCs coming up, and so on and so forth, it's going to improve the entire the trust which exists in the system.
Yeah.
And then that will then result in the launch of the new products, etc.
Well, you segue very. Oh, sorry, Brooks.
So on the savings point, before we go into the regulatory front, I think some of the math is pretty straightforward here. The World Bank has the remittance market at about $550 billion US dollars in 2019. That number we think grows up substantially this year. People are paying on moving that money across borders the old way up to 7%.
Yeah.
And that is an enormous amount of friction in the system. And if you take that way down, that is savings. That's savings at both ends of the sender and the receiver, and that money is getting out to where it's needed immediately for education, buying a crop, whatever the need would be. But saving 6% on money is impact in a big way.
Yeah, I mean, you add that up both directions. It's
For
huge.
sure.
But I think I totally agree with that. I think if you're looking at even sort of pretty tangible near-term examples I can think of as we look at how do we leverage what's happening in payments and blockchain into the savings area that you were mentioning. I think of even the examples in the US where if we're talking about faster, more efficient payments using the blockchain system, we start to look at, all right, well, at the moment, payments are so slow in general that we're actually stopping people from getting money as quickly as possible and being able to save some of that. So I think of the example in the US where savings are, most families do not have sufficient savings to get by even a small unexpected expense. And for I think about 30% of US households, the single biggest influx of additional income in a year is their tax refund. Right? Well, if that payment's coming in faster, and we've seen with government to person payments in the US, stimulus payments, for example, taking so long to get to people, if you're speeding up the way those payments are being made, you're actually enabling people to take some of that and make a saving or put it into savings quickly. And that contributes to financial health, certainly. And then I think if you look on top of that and say, well, all right, if the potential is there for government-to-person payments with the sort of programmable aspects of CBDCs, for example, then you can start to look at how, again, maybe some issues to solve here around privacy, data protection. But you can start to see how some of those payments made by government could be for specific purposes. You could start to see sort of nudging in terms of how that goes into savings. So by default, those payments being made over the blockchain into a savings type of account, however that looks in future. Those are things that could actually make a material difference to financial health for a lot of people in the developing world, but in very much the developed world as well.
Yeah. Now, we were segueing quite nicely into the next question I want to bring you in on, Richard, as head of government relations for PayPal. None of this can happen without the approval and the buy-in of government and regulators. And I think it's fair to say scrutiny of both blockchain and crypto assets, all kinds, is really stepping up in the US, in Europe, and elsewhere. So, as somebody who is dealing with these issues kind of every day, I mean, basically what needs to happen for regulators and governments to get comfortable with this being used on a mass scale by ordinary people, and the mainstream financial system en masse?
Yeah, thanks. That's a small question. I think, and by the way, I've sort of taken over the public policy guy, the guy who deals with the regulation and law all the time, is the only guy not wearing a tie up here, which I find fascinating. But I think, to answer your question, I think there's, on the one hand, you could say, well, if we wait forever for regulation and policy to catch up, we're not going to get very far, right? And I'm sure some of my fellow panelists would laugh at that. I think at the same time, look, I think from my perspective, the sort of policy and regulatory discussions around blockchain and crypto in terms of payments in particular, it's almost as exciting as the technical side at the moment. There is so much happening. And I think that's a real opportunity for us in industry. So you look at specific policy or legislative initiatives around the world, you start to see competition from regulators, from governments, from central banks, which is healthy, right? Well, that's good. as long as we're all contributing and fostering collaboration between all of those different entities as well. But I actually think if we're looking for sort of one specific proof point, one singularly significant event in recent months, I would point to the executive order from the US White House in March this year on ensuring the responsible development of digital assets. And the reason I call that out is because, to me, when you look at the title, already what you see there is an acceptance. This is reality. This is happening. We need to embrace it. Okay, and that's coming from a starting point before where a lot of the focus in the regulatory and legislative space has been on the risks involved. And what we see in that executive order is really an all-of-government approach being advocated to the opportunities, as well as the risks, of course. But it's talking about competitiveness internationally. It's talking about the opportunities of inclusion. These are really, really positive developments, which I think if you look at a lot of the European Commission's work on MiCA, if you look at the sort of blockchain strategy, you'll start to see something that you see something that's earlier, you start to see something arguably more comprehensive. But I think in terms of a missing piece of the jigsaw, that executive order from the White House in the US really is a fundamental step forward in terms of where we're all trying to go, which is to have these discussions with legislators, with regulators, about the benefits as well as the risks, how we mitigate those. And I just think that's such an important moment for all of us. And now it's incumbent upon us all, as many of you will be doing already, to be part of that, the respectful education of policymakers.
In the world's biggest financial market as well. I mean, we've seen things happen in the UK, Singapore, elsewhere, to really start trying to bring the US dollar into it. Could, depending on what they conclude, could change things.
Absolutely.
Brooks, I'm going to bring you in. Ripple has obviously had experience, with US regulators, or is still having experience with US regulators now. What's kind of your take on, how this becomes mainstream, how it becomes its adoption becomes accelerated?
Absolutely. And we have experienced regulators all over the world, and some of them are in different shapes and forms and stages. But that is the big point: is we have a firm belief, and PayPal does this extremely well, of just being out there, building relationships. The education point is key. Why should they even take time to look at these technologies? What is it doing for them, their country, at that level for their people or citizens? And we've got to make that case and do it and kind of stay on it all the time. And so we're doing that all over the world. I think there are issues with jurisdictional differences. There's a reason that we have built a very large headquarters for APAC and MENA in Singapore, because I think that's a jurisdiction that actually, with the regulator there, the MAS, that is taking a good look at this. They're being methodical, as they always are, but they want to create a fintech and crypto center. And that is a place that we want to build a business. And that's a place where we can serve customers and do the things we want to do with the products we've talked about. And look, there will be jurisdictional arbitrage and jurisdictional momentum one way or the other. So you don't want to be chasing it, but you want to be building it wherever we can. So that the U.S. piece will play itself out. We're hopeful. We think we're doing all the right things there, but that hasn't stopped us from building in the rest of the world, for sure.
And Ralph, if I can bring you in again, what, from your perspective, regulators around the world, what do they want to know? Because when we get down to individual consumers, individual savers, that's when the bar has to be very high to allow use of both crypto assets, investing in crypto assets, trading them, but also using blockchain for technology. This has to work. Otherwise, ordinary people could lose their savings or have their lives affected. So, what do you think are the main things that regulators and governments need to get comfortable?
Absolutely, that is the most important question, because if you look at why is the financial industry regulated, right, at the very base, it is regulated because it's a deposit-taking institution. And regulators around the globe would like to protect the interests of the depositor, right? Small person who puts his life saving. And therefore, that perhaps is the driver of most of the decisions, that look, how do you protect the person who perhaps does not understand the complications that are involved? And therefore, the regulatory concerns will be around, how do you protect interests of depositors? How is the product less risk-taking? Are the risks understood? Another issue with regulators historically in the past has been that, quote-unquote, financial industry has not been very, adept at managing risk, as we saw in 2008-9, crisis took place. So I think these kind of fears are there at the back. And therefore, the regulators want to, number one, protect the interests of the depositor. Number two, make sure that the institutions don't take inordinate amount of risk, right? And technology is great, but it has to be understood, right? Because what is if you really look at blockchain technology, it's about contracts, and contracts is about code. People are writing code. If this happens, do that. And then there are many of these contracts which come together to create a product. Things can go wrong in a product, and therefore you have to. Therefore, these are things which worry people, and I think most regulators will be therefore exploratory, but they accept the fact that technology is very, very powerful. It can substantially, as mentioned earlier by the panelists, decrease the cost of transactions. It can be more inclusive, and therefore the positives are definitely there. The risks have to be managed. The day the two come together, you'll be able to see growth.
And on the larger end of the scale, your bigger commercial multinational clients, what use cases are they most interested in? What do they want to use blockchain for?
So, the way we are working with our clients, I just thought I'll just let you in on that. So what we've done is that we have set up, certain innovation labs, right? So we've set up innovation labs in the cities where fintech, for example, exists. Like Berlin is a place where we set up a lab. Amsterdam, another place, set up a lab. We set up a lab in London as well. Now, what we do here is that we create sandboxes, and we bring in the technologists who understand the technology. And then we invite our clients, and sometimes even the public who is interested, maybe some regulators as well, to come and see the use cases, and to touch and feel it. And we also give access to our clients in terms of talent, because you must remember here that the world has not got like one or two banks. It's got like 400, 500 large banks. It's got 400, 500 large insurance companies, all of them trying to grapple with the problem. So we provide that kind of an enabling environment where we bring in technologists, we bring in fintechs, we bring in people who provide technology as well in sandbox kind of environment, and enable our customers to kind of understand what's happening there.
Okay, well, one of the other big debates on both sides is security and fraud. People say that having everything on the blockchain seamlessly integrated can actually help cut it. But equally within the crypto world, we have seen a lot of people lose money. There's been a lot of crime. So, I just want to get your take first, Richard, on whether you think this kind of transparent blockchain public ledger actually can help fight corruption and fraud, especially in a global context, not just in the West, but like worldwide.
Yeah, and I may link it back to aspects of the previous question about how sort of regulators and legislators are thinking about that, because I think it's of course top of mind. Look, I think there's the point around leveraging blockchain, programmable use of the nature of the assets that you can use, and how that can be used to sort of cut risk, cut fraud, because you'll be able to track things in a different way, right? So there's definitely a lot of inherent advantages there. But I think we're touching upon one of the points that is of top concern to regulators and legislators, right? So Rahul absolutely mentioned the sort of key things from a government or a regulator or legislator, central bank. They're looking at how do we protect the stability and integrity of the system? How do we guard against abuse of that system? How do we look at consumer protection? And so you look at these areas, and if you take the different things there, consumer protection, you're looking at do people understand what this is? Do they have a good enough understanding of how to use it? Do they understand any risks involved? And the concern among regulators is that that's not quite there yet. And again, things, as we've all been saying, up to us to continue that education path. In terms of the sort of integrity or guarding against the abuse of the misuse of the system, then you're looking at a lot of the concerns around illicit finance. And again, I think there are lots of, there have been some unfortunate examples, of course, there very much are, will always be, but at the same time, I think there is a lot of reason for us to be able to show what we're all doing to mitigate against that, and actually how certain solutions can be leveraged to be fantastic solutions in that space. And then when you look at some of the issues around integrity and stability of the system, what we also see from some regulators, central banks, is this fear that actually, use of crypto or the mass adoption of crypto could actually, in the end, impact the ability of central banks to sort of administer the system, right?
Yeah, they could be disintermediated.
Right? And so that's when you, especially in certain countries where perhaps currencies aren't quite, or domestic currencies aren't quite so stable, fiat currencies aren't quite so stable. And so there's definitely that concern. And again, I think all of these points come into why we're so excited that the debate among regulators and legislators has started to look more at the benefits, because you can start to then counter some of these the negative examples with some of the positive examples and work out solutions to all of these fronts going forward.
Yeah, and I think it became really, I remember I was interviewing the governor of the Bank of France not too long ago for another FT event. And he was saying, look, the war in Ukraine has really brought this home. There are concerns that the cryptocurrencies and other non-sort of fiat pathways are being used to circumvent sanctions. And that was one of his reasons why we need to accelerate this, and we need to try and bring the legitimate financial system more in line with this technology.
And if just to sort of build on that point, if I may, I mean, I think I work a lot, sort of meeting with legislators, regulators. I have a lot of sympathy for how they're sort of having to gear up and look at all these developments going on, and so one of the challenges for regulators and legislators is how do we develop that regulatory system in the right way, right? I think regulators, legislators tend to have the initial reaction, which is how do we adapt a current regulatory framework to absorb something new, and sometimes that will be fine. You can do that in certain circumstances, but there are other cases where that won't be the right way to look at embracing some of these developments or mitigating against some of the risks that we see today. It isn't possible to port existing payments regulation and just use it with a tweak. And so I think these are the kind of things where, just as we think imaginatively about some of the technical solutions, we have to be imaginative and responsible in thinking about some of the regulatory solutions as well. And I think all of these examples we're just discussing are crying out for all of us to stay and be even more engaged, to help get to a place where we can all live with it, thrive with it, and help the regulators feel very comfortable with what's going on, and of course central banks too.
Yeah. So Brooks, what's your opinion? Is blockchain a way to cut and reduce fraud, and how can you sort of get away from this kind of public perception that is, as I think the governor of the Bank of France said to me the other day, a bit like the Wild West at the moment?
Well, part of it is it's kind of incumbent on all of us to build ecosystems in whatever part that we're building in that have players that are, first rate, stand up on all these issues. And as you build a financial network, as we are, and we have big global financial institutions on our Ripple network, we also have some of the most cutting edge PSPs or fintechs. But in order for them to come onto this network from a AML standpoint and know your customer standpoint, I mean, we have super high rigorous standards, because if you are opening up a marketplace or a network, you have to have that. And so some of this is, yes, we can move on the regulators and educate them and prove points on use cases, but within the areas that we're controlling and the spaces that we're building against, I think it's really important that we all do our part. And look, that will be one of the things that people look back on this, this time together here in May in Davos. And this is a big topic throughout, but how are we actually all in our individual sandboxes or areas or jurisdictions going after this? Because as you kind of turn, and we've sort of touched on governments and CBDCs here, but there really are very few central banks that are not thinking about this, working with people in our industry on it. And if they're not saying they're doing either, they're probably not telling us, because everybody has to be focused on this. And we do think that central bank digital currencies are yet another great way for a government to realize some of these ambitions of getting value to their citizens, to their people in a more efficient way. We think there's opportunities for companies, every one of the companies on this panel and so many more, to be advisors, to think about interoperability between central bank digital currencies, to figure out best practices. And the beauty of this is none of these two countries are going to be alike. We talk about France. Our first MOU with a country was the Kingdom of Bhutan, which is incredibly small, but incredibly technology savvy, and has the ability to think about what could we actually do if we just started from scratch with a digital bank and a CBDC. And those are exciting conversations, but they're going to vary, and it's up to all of us to get up against them and help them across that line.
How has it gone in Bhutan so far? What's the progress?
These are long processes. It's early days, but the dialogue is great. They've, I think we're also working with places like Palau and others that are, again, sometimes not your very obvious, bigger countries. We have those conversations going as well. But we're going to learn a little bit from each of these, and my guess is that central banks end up cross-fertilizing quite a bit as they figure out these solutions.
Yeah. Rahul, how far do you think we are away from a central bank digital currency? I mean, a lot of what we've spoken about on the panel so far has been how quickly everything is moving. Regulation, governments, even consumers are playing catch-up.
The last statistics I read somewhere that look almost 70 to 80% of the globe's central bank are thinking about CBDCs. There are white papers out there thinking about making it happen, etc. So, with so much interest in CBDCs, I think the time is not too far for them to experiment and, launch them. There are dates coming out. Like, for example, the Indian government has come out with a date when they will be launching a CBDC, a central bank digital currency. And, with the acceptance of large central banks, it will start happening. It's not too far away.
Yeah. What do you think?
Well, don't forget we've got China with the People's Bank of China already, with the ERMB actually implementing in certain areas very successfully already, as far as everyone can tell. So it is happening. I think there is still a lot of work with many central banks, as we all know from our engagement with them. They're eager to learn. They're eager to talk about some of the design choices that need to be made in terms of how they're thinking about scale, how they're thinking about some of the management of policies that we've talked about. So I think there's still a lot to be done, and we start to see central banks in certain parts of the world talk about certain timelines. India's one. We've seen in the US talking sort of it's still several years away. Yeah. But again, I think while we can also map those dates, I think the important thing right now, as Brooks was saying, it's just the sheer amount of work, the number of pilot projects going on, the receptiveness of central banks to work with responsible industry players and say, what are these choices that we're going to make? How are we going to manage this subsequently? Who's going to be involved? Who are going to be the companies that are able to transfer and use CBDCs? I mean, these are huge questions, and we're just very happy to be engaged and happy to see the momentum.
Yeah, I mean, the flip side of this transparency, the distributed ledger, is also concerns about privacy, both when people are dealing with, the blockchain or crypto assets in sort of personal capacity, or perhaps more concerningly, central bank digital currency. The government, or the government-linked entity, essentially being able to see your entire financial life laid out in front of them. In some countries, that could be okay. In other countries, that could be very bad. Brooks, what's your take on how you strike that balance between this transparency helping to cut fraud and improve systems and cut costs, and not taking away too much costs and not taking away too much financial privacy from people?
Yeah, absolutely. This is a discussion point this week in a lot of places, for sure. I mean, we've taken privacy very seriously on our network, of course. But we also, again, back to the point of who actually is on your network is the first place to start, that you have good actors involved with your customers, be they enterprise or consumers, from that perspective. So we do think that there are technologies in countries that have gone to universal IDs that is a great place to start from to deliver some of these products on top of. But this will not go away as a topic for a long time. Privacy of information for the consumers themselves.
Yeah. Rahul,
my take on this is that I think if you look at really last couple of decades, the privacy around banking matters has been slowly coming off, right? So what was very like a closed group getting more and more open. I understand that 97% of payment transactions even today are digitally done, right? When you swipe your card, etc. Cash is not much used in any case. So if you fast forward that another 10 years, I think privacy of information, which is good to keep, will be left. But privacy of information, which allows for frauds to be detected faster, allows for sanction-related transactions not to happen. That will obviously be good for the industry. As much as it gets more transparent, it'll be good. I think that's what will happen. But privacy of personal information is what has to be kept secure. I think that's how the networks will be designed. Keep personal information secure, but check transactions for misuse of funds, misuse of all the other kind of stuff. And that's the transparency that will come using blockchain technology for the evil of transfers is what is good.
Okay. Now I have one more question before I'll go to the audience. So just have your questions in mind. To unlock the transformative potential of blockchain, you can't ignore the carbon footprint of the system that we have at the moment. I mean, at the moment, it just consumes far too much energy, both in mining crypto assets, but also running the technology. So that has to change if this is to gain widespread adoption and be cost effective and also responsible. So, I mean, Richard, how's PayPal kind of thinking about this?
Yeah, I think, look, very much in line with how you just described it, right? So we're thinking about the kind of investments that we can make with our partners in groups with other companies, in organizations that are looking at this issue and how to ensure the most efficient use of energy consumption when we're looking at these technologies. So, whether it's with the infrastructure today, whether it's looking at some of the exciting innovations, investments we can make, especially in developing countries where you're looking at sort of how do you look at financial health, fintech based on blockchain in vulnerable areas from a climate perspective. And that's, I think, where we're going to see a ton of really interesting innovations that we want to be taking on board and bringing into the mainstream. So I think the industry is very conscious of the question you're asking. I think there are some good moves already in terms of where we're seeing people deploy those resources, and the appetite is even stronger to continue that. So I think that's certainly first and foremost on the minds of a lot of us as we're thinking about where this is going.
Brooks.
Yeah, this is a really important point. Actually, it matters candidly as you're building companies because your employees care deeply about this issue as well, in addition to the bigger macro issue, and that's certainly been the case with us. Interestingly, if you go back, because we set this up today on a 10-year front, 10 years ago when the XRP ledger was built, it was actually purpose-built for payments. We thought that was the best use case, and it was also built with real sustainability features involved as well. So we've been very proud of that throughout as we've built out both RippleNet and
what sustainability features does it have built in?
Just the ability to not have the mining function as it goes on later in life. And so, it doesn't take countries to power it. It takes a couple of homes worth of power, which I think is obviously the very different outcome in all this. But what do you do with that if you've already made that technology decision is you got to get involved in the discussion. And so we were one of the first crypto company to sign the Crypto Climate Accord with people like Singapore Power or the Rocky Mountain Institute in my home state of Colorado, really a leading effort just to think about to make sure and put this up front. And then also have gotten involved just last week with a big investment into the carbon credits, both markets and ecosystem. And so, again, this kind of goes back to all of us doing whatever we can where we are. And once you have something that works, to push it and lead with the dialogue, especially the technology that you have is sustainable, which we believe ours is.
Okay, I'm going to open it up to questions from the audience. We've got a few already. You had your hand up first, so if we could get a microphone to this gentleman.
Yes, thank you. My name is Philippe Meunier from Switzerland. I represent several organizations. I have a practical question for Mr. Entwistle. You mentioned that we can use Ripple to transfer money easily between different countries. Now there are a lot of companies that have legitimate reason to make payment in Russia because they have employees or suppliers. Can we use Ripple for this purpose?
No.
That was an easy one.
Well, because of what we've talked about earlier, we have, in building this network from a sanctioned country standpoint, we've had to be on a very clear side of that line. And so that's an important piece of that. And it's an issue, I realize, for organizations that still have people on the ground that need money to get to the right places for very good purposes. But within RippleNet, across our 55 plus countries, we simply can't do that.
I'm assuming it's the same for PayPal.
Yes, we have had a business in Russia. which supported cross-border payments, and that, of course, has been suspended in line with our own take on the situation, of course, and also in compliance with the different sanctions and regulatory questions that we have here.
Okay. We had another question down here at the front.
Thank you. I'm Douglas Horn. I'm the chief architect of the Telos blockchain. And I think you gentlemen have done a wonderful job of discussing how blockchain is being used in financial services from the top-down global capitals and world financial centers. But this started out talking about the billions of unbanked people, and most of those aren't there, right? Yeah. For us, we're approaching this from bottom up. Mm-hmm. We are, several people built the first, in South Africa, in Latin America, the first Rand, South African Rand stablecoin is built on our system. We are working with Kenya, just about to receive our third level banking license there. Africa poses a very particular problem because there's no intra-African currency exchange. So we're working on so my question is this: we work on the ground locally, and we're seeing something very different, right? The picture from the top down is very much as you've described, and that has to happen. But the bottom up is that there are each of these countries, for example, in Kenya, there's no banks, right? People with about 90% greater cost efficiency. How are you working together, and how are you working at this level? Are you waiting for groups like Telos and others to come up to you and to meet in the middle, or do you also have initiatives in these areas? Because I think this is where the crux of growth will be. This really is what's going to unlock the transformative potential of blockchain.
Who'd like to take that one first?
I'm happy to do a quick. I mean, first of all, thank you so much for what you all are doing, and we share this. The African continent, certainly a big, important opportunity, number one, but also a real need. In a partnering model, and this really comes down to kind of how we particularly, or anybody that's operating kind of the rails or the network or blockchain across borders, how are you dealing with the actual local kind of last mile? And that's where our partners come in. And so we do think about this very much at a local level, by kind of partnering with the people we believe on the ground that are doing the most innovative way of kind of delivering a payment in whatever form that is to the last village, last couple meters into there. Because you're right, these are all kind of enterprise global solutions across borders, but the real issue is it reaching a far out Kenyan village? And so, but we appreciate all you do.
And the Kenyan shilling solution does not
exactly
work for the Nigerian, Nyara solution. It's each country is its own system.
Yeah.
Unique system.
Richard, do you want to?
I mean, I would just add. I mean, I think the work that you and others are doing is unbelievable. It's fantastic, and as you say, if we're going to talk about the advantages of what we can bring through blockchain in terms of access to the financial system, non-traditional financial system, as well as the traditional financial system, we've got to be talking about diversity of access as well, and that's exactly what you're doing. I think it's unbelievable. I mean, in terms of a company like us, yes, we're going to be learning from you and trying to partner with you and try to grow how we're able to influence things there as a result of that, right? To bring it to even greater scale than the fabulous work you're already doing. I think on the policy front as well, and we talked a little bit about interoperability of CBDCs as one of those areas. Ultimately, when you get to that, on top of everything else that you're talking about as being important, we're also talking a lot in the regulatory spheres about when you're looking at the adaptation of the traditional financial system into leveraging the use of blockchain, it's not just the traditional financial services players that you need to be looking at, both for innovations, but also taking responsibility and managing risk. And I think that's something where we've been, not just for ourselves, but for other players as well, trying to make sure regulators and central banks understand the value that is being brought in, not just by banks, who, nothing against banks, they're doing great jobs as well in this space, but there's so much more richness that we can bring in that really gets at this point of diversity of access that I think you're hitting at.
On that point, the Kenyan government has been very interested in all our other use cases like transparent governance and
Yes.
things like that. At the lowest levels where they really need this, they're like sponges. They're receptive to everything. Which has been,
And is the infrastructure there on the ground for you to be able to operate this? Do enough people have access to the technology to get in there?
yeah, because it's a mobile phone. So, for example, in Kenya,
Yeah.
M-Pesa was based on the cellular networks using the Safari Land system, which is Vodafone, and but we use internet. So it democratizes access, whereas you usually see M-Pesa being in a small shop or something like that. Individuals will be able to control their own accounts with a greater level of control and transparency than just using their own cell phones.
Yeah.
All right. Well, thank you for that question.
Sorry,
Fascinating.
great
No.
discussion.
It was really interesting. I saw your hand first, very slightly. Then we'll come to you.
Hello, my name is Leonid. I'm from Ukraine, blockchain development company for Eto Solution. And my question for Richard Nash. First of all, thanks a lot for starting working in Ukraine.
For sure.
It's something unbelievable. But my question, are you going to integrate some precise blockchain-related features into PayPal? I mean, working with CBDC or stable coins or something like that. Thank you.
Thank you very much. Yes, I mean, firstly, it's with great pride that we were able to stand up a new service very, very quickly in conjunction with our partners and the card networks to make that happen. And that's been very successful. So we've seen more than, I mean, in terms of what PayPal's been able to facilitate, more than $500 million in donations in terms of humanitarian aid through a lot of our non-profit partners, which is fantastic. On that new service, more than 100,000 new accounts set up by Ukrainians to be able to receive money. It's been overwhelming for us, and we're very grateful for the opportunity to work with the government and the central bank to enable that. So I mean, everything we can do there is great. In terms of your question then, going forward, as I said a little bit earlier, I think that we're so excited about all the different potential here. We have been careful as a regulated company in so many different jurisdictions around the world. We have to sort of take note of all of those jurisdictions and how they're looking at our services globally. But you've seen us start some crypto services in certain jurisdictions only at the moment. And yeah, sure, the goal is to develop what we're doing now, take advantage and embrace responsible, legitimate, private digital currencies as well as CBDCs. So we're excited by that, and I think at the moment, our business folks and strategy folks are looking at your exact questions, figuring out what we do ourselves, how we can partner with other people. And my job is to keep the opportunity open when we're looking at governments, central banks, and other regulators. So I'm sure there'll be more for us to say in due course, but I'll pause there for the moment.
I just want to squeeze in one last question before we have to end the session. So this gentleman here.
Thank you. Thanks. My name is Ralph Kugli. I'm also with a blockchain project, Casper Blockchain. Isn't the key to financial inclusion doing unsecured lending on scale for small amounts?
Rahul?
Savings accounts don't seem to cut it, really. So access to credit on scale.
See, unsecured lending, unsecured lending by the name by itself, it means that, look, there's no collateral, there's no security, right? So there's an inherent risk. It just becomes like a payment product, right? I think, what blockchain technology, and I'm really just innovating myself as I'm responding to your question. What blockchain technology can do is it can improve the identity of the individual, because digital identity is possible. So you know the person better, KYC, etc. You may have a lot of information. And that perhaps will improve the ability of the institutional lending to do unsecured lending, because otherwise unsecured lending is without collateral. You're just lending it without any backup, right? But the knowing that the use of funds is appropriate, the immutability of the record, which means that you know where the money is going, etc., makes it a little bit more easier to do unsecured lending. That's what I would say. But I don't know how you look at it.
Well, I think, I mean, I don't disagree with your statement at all. I think that we haven't talked about liquidity, but liquidity in these markets, in these digital asset markets that we're building, I think is a key component to actually being able to do more innovative things on the lending side, certainly be able to do that. So there's lots of work being done at our own company and many others on realizing that as well with these technologies and digital assets that are there.
I think the completeness or added completeness of somebody's payments book, right? You just get a much wholer picture of what somebody's financial transactions are. Now, of course, there are privacy and data protection issues that we've got to look at there. But in terms of just the simple idea of, well, there are certain countries around the world, I know, Rahul, you were saying that cash is less and less a factor, but in certain economies, including the US, by the way, cash is still very much a huge component.
Germany, not too far from here.
Germany is another one. And so just the sheer nature of bringing a lot of those payments into the digital space can actually help with the whole question of creditworthiness, right? And having that stronger book of data should allow an awful lot more. And by the way, that's going to be an awful lot more inclusive as well, because look at which parts of our populations are predominantly using cash. So I think it's so exciting to see what can be done in this space.
Okay, well, I think that's all we've got time for this morning. So I want to thank the audience here in the room at Davos and everyone watching online as well. But most of all, Brooks, Richard, and Rahul for being excellent panelists. So thank you very much.